money and metals. Well, the big news, precious metals wise, is that gold hit the longest losing streak it's experienced since 1973. Something like 8 days in a row of falling prices, and it caught a bottom on Friday, showing a little bit of strength here. It's notable to realize that the US dollar is also at a 12-year high. So most talk about gold and the dollar going opposite directions. Certainly this is bearing out at this particular time. The other precious metals news is that the silver market is also showing weakness under the $16 level. And palladium, that has been the strongest of the four precious metals that had shown pretty good strength throughout the last year, also has done reverse and is showing some weakness here along with the platinum market. In other gold news, the Hong Kong Futures Exchange on Friday last week suspended its thinly traded gold futures contract ahead of this week's replacement of the century-old London gold fix. A new electronic auction run by the Intercontinental Exchange is due to take over the fix on March 20th. The move to electronic auction for gold is part of a wider precious metals benchmarking reform that started in 2014, which stopped the daily conference calls between representatives, a handful of banks, who agreed on a price reference point for producers, consumers, and investors. Something to watch. We're watching closely. Will this cause any disruptions in the precious metals? That's to be determined. US dollar producer prices fell 0.6% last month, the first drop since the series was revamped in 2009, pointing to tame inflation that could argue against the anticipated June interest rate increase suggested by the Federal Reserve Board. The European Central Bank's quantitative easing program, meant to stimulate borrowing and investment, stands in contrast to the expectation that the Fed's stated interest rates will rise later this year, and of course that enhances the dollar's yield. U.S. investment bank Goldman Sachs now predicts that the euro will plunge to parity by 2017, and the sterling tumbled by more than 1% to a fresh 5-year low against the US dollar. Britain said it would seek to become a founding member of the Asian Infrastructure Investment Bank, the AIIB, a new regional body backed by China that has raised concerns in the United States about governance standards. The Asian Infrastructure Investment Bank was launched in Beijing last year to spur transportation, energy, telecommunications, and other investments. Analysts have said it could challenge the Western-dominated World Bank. And of course, Britain is the first major Western country to apply for AIIB membership. Basically, we have a competitor possibly to the World Bank. What does this mean for the US dollar in the future? We don't know. But if the United Kingdom is going to move to the Asian Infrastructure Investment Bank, it could put further stresses on the dollar. The alignment between the London and Wall Street concerns have been very strong for a very long time. This certainly puts a twist into that mix, and we'll watch the story carefully. Speaking in London, Wilhelm Mittelkoop set out what he feels to be positive attributes for both the gold and silver markets. Speaking at the Global Mining Finance Conference in London, Dutch precious metals fund manager, writer, and analyst Wilhelm Mittelkoop painted a more positive picture for the precious metals. While Mittelkoop is very positive on gold for many reasons, gold bulls are globally the largest bond bubble in history, massive global debt. He draws also on Chinese policy and stated that he thinks that China may announce a substantial increase into the amount of gold that they will be importing in the future. He sees China, Russia, and other like-thinking nations targeting to de-Americanize the world and move more into the precious metals. Also, it will set up the new alternatives to the SWIFT global financial interbank trading network. As much as he likes gold and feels it is an excellent long-term investment, especially at current prices, and due to move sharply higher in the medium to long term, Mittelkoop sees silver as probably being an even better investment in terms of growth potential in US dollar terms. New mine silver production, he states, is substantially below demand, while over the years above ground stocks have been run down, and unlike gold, there are no huge central bank holdings which can be drawn upon to take the price down. The only real surface stocks nowadays are held in the silver ETFs, and although these can be a little volatile, much of these remain in strong hands. Middlecoop feels these overlying volumes will not counter what he sees as the overall supply deficit now prevailing. With its comparatively strong industrial demand, the demand is seen as growing along with the electronics and solar power sectors. The supply-demand fundamentals are probably more relevant to silver than to gold. And he said as an aside that he has taken bets that silver will be over $100 an ounce by 2020. Silver investors should hope he is correct. And that's a wrap for this week in Money and Metals.